right, let's go ahead and get started with Chapter 3 in Unit 8. This chapter is over stock market data charts. We have 4 objectives here today. I will interpret a stock bar chart. I will create a stock bar chart. I will interpret a stock candlestick chart. And I will create a stock candlestick chart. Here are our key terms. Make sure you've reviewed those before we get started with this video. Okay, first example, at which day had the greatest high price and which one had the low price? So prices are all up here in this top one. Volume represents below. And I want to go through here real quick, just so we know. Here is the daily high. Here is the daily low. The bar on the left-hand side is the opening price, and the bar on the right-hand side is the closing price. So it asks what day was highest, what day was lowest. Well, it looks pretty obvious here. The dates are down here below. So this is April, and then we start with May 1st and 2nd. So the highest was on May 2nd, which you can see here, it went higher than any of the other days. The lowest is coming down over here at April 29th. Okay, please press pause, go ahead and solve this, come back, and we'll talk it over together. It says here, between which 2 days did after-hours trading appear to have the biggest impact on the difference between the closing price and the following day's opening price? So if you remember right here, these little tick marks are the opening and closing prices. After-hours trading is going to mean that it's going to make a huge difference between the closing of one day and the opening of the next. So we can see here on the 28th to the 29th, no real impact. But here, there's the 29th's closing, here's the opening. Had quite a bit of an impact. Here, almost no impact. Here, a little bit, almost even competitive with here. But in the end, the after-hours trading had the biggest effect between April 29th and April 30th. Okay, example 2. Approximately how many shares of motor company were traded over the 5-day period? Now, I'll tell you, I've reviewed this in the book, and my numbers, I kind of looked at it and solved it before. My numbers look very different than the book's. So I am going to go with the book for consistency's sake, but if you're off a little bit with this, just make sure you know how to read it and that you're not reading it way off, is I guess the best way to say it. So what it's telling us in the book is that this first day, I'm looking at 185 million shares traded. Plus, day 2, the book says 60. Day 3, 65 million. Day 4, about the same as day 2, so plus 60. And then day 5, plus 90, because it's right here below the 100. When I add all of those together, I end up with 460 million shares traded in that particular week. Okay, instead of pausing for this, let's go ahead and just walk through this together. It says use a stock bar chart to write a brief financial story of the trading that occurred on the Ford Motor Company on April 28th to the 29th. Begin your story with, on April 28th, 1 share of Ford Motor Company opened at $8.15. And we can see that from the chart above. For you, it's on the chart above. For me, it's the previous page. So basically, we're starting out like that. And then it's going to continue with, during the day, the shares reached a high of $8.42. And a low of $8.10. And then Ford shares closed closed at approximately, and I'm going to go ahead and just abbreviate that, $8.21. All right, example 3. Use the information below to construct a one-day stock bar chart. So I did go ahead on a sheet and I actually wrote it out, and that's what I'd like for you to do. But for purpose of this, I wanted it to be easily readable, so I went ahead and I copied the chart from the book. So notice here it says the open is 40.10, and our opening is right here, and if we go along here, it's right in here, it's at about 40.10. So we've got that. The closing was at 39.79, and we can see it's right above the 39.75. The high was 40.65, and the low was 39.39. And then the amount of shares traded right here, we're at 44,500,000. And so that's what it should look like when you've drawn a stock bar chart out. Again, with this check your understanding, we're going to just talk about it together. So it says, suppose that trading was suspended for one entire day in the corporation. What might the stock bar chart look like? And quite honestly, it might be empty, or it might have a flat horizontal line at 0, or at the price for, well, it's actually at the price, last price, with 0 volume. So it's a 0 volume. So horizontal line there for 0 volume of shares traded. All right, example 4. Explain the difference between the market action on the 8th compared to the market action on the 9th with the candlestick chart for 7th through 11. Well, some things that you got to know about the candlestick chart. Let's go ahead and go through those. First, the lowest part of the day is the bottom of our candlestick. So that is the lowest price of the day. So as you guessed it, up here at the top is the highest price of the day. The top of this candlestick, it represents the opening or closing and the bottom represents also the opening or closing. Now, with regards to the body, if it is black or red, then the stock closed lower than what it opened at. If it is green or white, stock closed higher than the opening. So let's go ahead and take a look at the days that they're talking about And it says here between September 8th and September 9th, the differences. Well, the 8th is this second day here. It's in green, so we know here that the stock closed higher than it opened. And with the 9th is in red, so we know the stock closed lower than it opened at for the price of that day. All right, interpret a green candlestick that is shown as only a rectangle with no tops, no bottoms. So basically, if we were looking at this, it would mean that it's just a box. What does that mean? Well, basically it means it's green, so the close was higher than the opening. And the closing price was the highest price of the day. And the opening price was the lowest for that day. And that is it for this particular lesson. So good job, everyone. And actually, that's not true. So let me go ahead and we'll go through this last quick example. All right, sorry about that. Example 5, what was the approximate difference between the highest price and the lowest price for the week shown in the candlestick chart? Well, we see here that the highest price was right here at about $39.90. We see that the lowest price was right here on this line of $37.75. So when we subtract the difference, we see that it is a difference of $2.15. Okay, so looking at this, we see here that the lengths of the candlesticks on the 8th and the 11th are approximately the same. What does this mean? Go ahead and press pause, think about it for a moment, and then come back when you're ready. Okay, so basically what it means is the difference between each day's high and low is about the same. So each day's high and low are about the same. Now I do realize that on example 4, I actually was on the example 5, check your understanding, but we did actually work the check your understanding for 4, so make sure that the answer that we wrote is under the answer 4, check your understanding. And that's it for this unit. Good job, everyone.